Welcome, everyone. It's Thomas Montgomery, IIMFL Smart Money Alliance. It is Thursday, February 11th, 2021 at 8 o'clock Central. We get together most weekdays at this time, a minute or so before 8 a.m. to meet with our distribution partners. We have three different types of distribution partners. We have affiliates, free and easy to be an affiliate. Who wouldn't want to be an affiliate? Affiliates just simply refer in. They don't sell anything to anyone. And what they do is they're helping provide access to capital. And what I mean by that is we have a grant subsidized, no upfront cost program called Access to Capital. It contractually guarantees at least $100,000 capital raise. There's no minimum credit scores to participate, no minimum time in business. So what affiliates do is just create awareness and drive in leads. We take it from there. Affiliates are not involved with working with the clients. They just simply get paid. They get paid a couple different ways, technically three different ways. Affiliates are paid $1,000 up front. I'll put an asterisk behind that, which means once the refundable deposit is collected from the client, which is normally between weeks 2 and 3. They're also paid 1% of the capital raise, which is great. So, if we're guaranteeing $100,000 capital raise, each affiliate's going to earn at least $1,000 off of what we'll call the back end. Could be a lot more than that, but a minimum 1%. And then if they're a licensed insurance agent, then they can write the key person policy. While we're not an MLM or network marketing company, we do have overrides, and affiliate models typically do. And so we pay 3 levels deep. And so what that allows is if you recruited someone to be an affiliate, they get paid and you get paid override. And that's true for 3 levels total deep. So that's one of the 3 roles. Free and easy. I don't know why everyone wouldn't want to be an affiliate. Secondly, we have our credit literacy educators, and they're involved with, to no surprise, educating about credit. It's part of our mission statement to help people improve credit. And as an organization, we help both improve personal and business credit. Yes, James, I realize there's no picture. Our office is closed today. There was an ice storm. There's no power. There's no internet in our office. So I'm working remotely today. So forgive me. We're just going to have an open forum discussion. No worries. And then So credit literacy educators, again, they're not salespeople. They don't sell anything. They create awareness, drive people into a landing page that we provide. Credit Boost is a very innovative offering, and it's very effective, but it's innovative. So we're helping people improve their personal credit. There's no upfront cost, and we're not a credit repair company. There's lots of credit repair companies out there. And so we don't wish to compete with them. And in fact, we get referrals from many credit repair companies. So what does credit repair do? Credit repair helps remove derogatory items, and that's fine, but that's not what you and I are talking about. Instead, what we do is we help add positive credit. So we hired a program manager for the Credit Boost program, and she's just busy, frankly, invoicing clients. And when she invoices clients, that means there's success, isn't it? That means that client's credit score has gone up, and we only get paid based upon results. So we invoice the client based upon their credit score increase, and you make a lot of money by simply creating awareness. We do have overrides, again, not MLM, not network marketing, but for our credit literacy educators, we also have overrides. So that's the second of the 3 roles. And then the third role is the joint venture partner. So joint venture partners are also affiliates. They're also credit literacy educators. They get paid more. We do a 50-50 split of the net with them. But maybe most importantly, joint venture partners are actually working with the clients. And so some of you want that and some of you don't. So I'm not saying that you would be a good fit or wouldn't be a good fit as a joint venture partner. But our joint venture partners are actually doing the mentoring with the clients. The clients that the joint venture partners work with can fall into one of 2 categories, one of which would be clients that they or their team develops, and that seems kind of obvious. But the other, which is really important to realize, is we have lots of orphan clients that we send to the joint venture partners For those orphan clients, we pay them $100 an hour to do the mentoring, and which is not a bad gig. And then secondly, then they're going to be able to do a needs analysis and identify what needs that those small business owners have. And when you look at the need for asset protection and wealth creation, growing income, it's a perfect fit, I really believe, for licensed life insurance agents. So do you have to be a licensed life insurance agent to be a joint venture partner? Absolutely not. But if you are a licensed life insurance agent or know one, I don't know that they'll find a better lead generation system than by being a joint venture partner. Because again, we're filling their funnel, not with even leads, but contracted clients paying you $100 an hour, essentially paying you to prospect with those clients. It's incredible. So those are the three main roles. And so we get together each morning, most mornings, weekday mornings, Mondays through Friday at this time. Normally I'm in the office. Normally I have my double screens up and we have more functionality. Again, we don't have that today because of the ice storm in East Texas, which is okay. We're still communicating. So what we're going to do the balance of our time today is answer your questions. If you're one of our mentors like Bernard already had 5 or 6 questions that we answered right before we went live, and that's fine. This is an effective and healthy and safe area for us to communicate and answer questions. And if there's concerns as well. You know, we talked about Credit Boost a few minutes ago. We are changing lives. You and I, us as a team, we're changing people's lives with Credit Boost. Quickly, we're seeing their credit scores go up. Now, of course, you know, this is an economic transaction, isn't it? So if we help their credit scores go up and they're enrolled in Credit Boost, then we invoice them. We invoice them to be able to pay you. And so sometimes we invoice the client. They're like, oh, I have to pay for that? Well, of course. That's why you enrolled in Credit Boost, is you wanted our assistance in boosting your scores. But you're going to see a lot of commissions coming your way here soon, because we got the new staff person, Paula, on board. She's billing those clients. Now, hopefully they follow their agreement, which says we will invoice you once a month based upon the credit score improvement. So it's very clear, very objective, and it's also in the agreement. And so we invoice them on the delta, the change, the improvement in their credit score. And that's in writing, of course. And then they have 2 days to pay it. And so then that creates a commissionable event for you. If they decide not to pay that, then they start accruing late fees of $50 a day. Well, that's insanity, right? Because now, instead of paying your bill on time, then you're paying it late. The bill still remains, and now there's late fees piling up. And then if they don't pay it after a certain amount of time, then it goes over to the compliance department. And then it gets really painful then, right? Because now it's at the compliance department. Now there's going to be attorney's fees, collection cost, and then we don't get emotionally involved with people that don't pay. It's just, if you don't pay, you don't adhere to the contract, then your contract is going to go to small claims court. And so we'll send them a copy. Here is the court filing that we're going to submit. Not a threat, not trying to be ugly or emotional. It's just like, you haven't paid. You haven't paid what you promised to pay. So we give them the respect to say, here it is. Here's the court filing that we're getting ready to file. The only thing that's missing on it is the docket number, which we're going to take it to the courthouse and get if you don't pay. All right, so if you can go ahead and put in your questions, comments, concerns into the Q&A, the question and answer function of Zoom, we'll start working through those. All right, so Dion, good morning, Dion. Dion has a question. He's focused on the access to capital, which I think is smart. I think Dion's very smart. Going out to the small business marketplace, whether they be pre-launch, startup, or existing, and providing them access to capital, which means no upfront cost, at least $100,000 guarantee capital raise, no minimum credit score to qualify, no minimum time in business. That's huge. And you'll automatically pick up Credit Boost clients, because as we go through that 4-week process, week 2, we're looking at their personal financial statement in terms of net worth, assets, and liabilities. but also we do a soft credit pull. Doesn't cost them anything, doesn't impact their credit. And so if we see that they have a lack of credibility based upon how they've paid their bills in the past, how they've managed their personal credit, then you're right, Dion, we'll recommend, hey, we need to build both your personal credit and business credit. And so for personal credit, we do that through Credit Boost. Dion's question is, if he brings a client into Access to Capital, and then we determine that they need Credit Boost and they benefit from it and they enroll in it, will he get credit? And the answer is yes. You brought the client, so you're being paid commissions from that client. Yes, sir, Dion. Thank you for asking. All right, so Scott has a question. He says he understands that we're invoicing 6% of their capital raise. So on Access to Capital, Scott, as well as Capital Ready 3.0, when we're helping clients raise capital, they're agreeing to pay a 6% performance fee. And we're paying you half of that, Scott. So you'd really like us to collect that 6%, I'm sure. So the 6% is billed after each tranche of capital raise. And so regardless of what structure that capital raise was, it might have been a loan, a line of credit, might have been installment, might have been revolving, it doesn't matter. And again, all of this is consistent, Scott, with the agreement that we have and the agreement that the client has signed. So yes, all capital raises, we invoice the client 6% because we're paying you 3%. If we didn't invoice the client 6% and we paid you 3%, we'd be going in the hole very quickly. So if that made sense, Scott, we're good. If not, follow up and we'll dig deeper. Thank you for that. All right. So on the compliance department, we hired ex-military. He's, I forget his MOS, Psych Ops, I think it is, airborne. And so he works part-time currently. And so you'll want to allow that our compliance department's not staffed 7 days a week. And so they are available to respond, within a short order. But the compliance department, Desmond, serves two purposes, don't they? The first of which is to make sure that we're doing what we say that we would do. And then secondly, making sure the client does what they say that they'll do. So it's a two-way street. So the compliance department really operates, think about within a police department, internal affairs, right? So the internal affairs is kind of a separate department, making sure that the police officers are following guidelines and doing what they should do. That's maybe not a perfect analogy, but I just want you to understand that the compliance department, if any client doesn't feel that we're fulfilling what we should be doing, then they'll go to the compliance department to get assistance, which is good. And then if we feel that the client's not doing what they should be doing, then they go to the compliance department to resolve it. And so if the client has a bill or has defaulted or breached, then you're right, Desmond, that goes through the compliance department. Some people don't like that. Some people are of the mindset, and you'll see this, Desmond, some people are like, well, I signed that agreement, but I don't want to follow it. No, it doesn't apply to me. Well, that's not the way business transactions work. You know that, Desmond. I know that. All of us on this Zoom webinar probably knows it. But some people are just, I don't know if it's illiterate or unwise, manipulative, I don't know. But some people will sign an agreement and then they don't want to follow and do what they said that they would do. So the compliance department tries to help bring them into compliance. And then if they can't, then again, it's not emotional, it's not personal. We'll let the judge decide. And then it goes to small claim suit. Thank you, Desmond, for that. So Scott's asking about the FTF, the first tranche financing. So the first tranche financing is kind of I guess we'll say a new focus. We introduced it a few weeks ago on training and said what we want to do is help clients get their first round of funding, what we're going to call FTF, first tranche financing, within the first 30 days of working with us. And in most cases, we're doing that. So what happens is the client's onboarded week one, we plug them into their business plan and financial projection software. We start working on that with their mentor. And then week two, we look at we do the soft credit pull and develop their personal financial statement, all elements that are necessary to be able to build a loan package. And from that point, then we can make recommendations on their first tranche financing, FTF. And so we have, I'll keep it at 99.99% of clients we can get one form or another of first tranche financing in the first 30 days. And so again, it's not always the same type of financing because different people have different mitigating circumstances. But yeah, so if we go out and we help a client get $50,000 for FTF, their first round of financing, then out of that, they'll pay the refundable deposit, $2,500, which you get half of, Scott. You get $1,250 as a joint venture partner. And then secondly, then there is the performance fee. So performance fees apply to the FTF. Just like I said earlier in this conversation, the performance fee applies to all types and all rounds of capital. Thank you, Scott, for asking that. All right, let's see. Michael asked, and Michael's a great example. Michael is a client that just recently got his first, so he's a distribution partner, but he's also a client and just received his first round of funding this week. Congratulations, Michael. He paid his refundable deposit just yesterday. Okay, so Michael asked, if the client does not follow through, what happens? If it's, I don't understand that question, Michael. If you retype it, I think it's a good question, but I don't understand it enough to answer it. So Michael, if you'll phrase that differently, I'll answer it for everyone. Okay, so let's go to the next. Oh, well, so again, the compliance, Michael followed up quickly. Thank you, Michael. So the compliance department works as a liaison, if you will. And so if internally we're not doing what we should be doing, then the compliance department gives us guidance of that so we can address it. And if the client's not doing what they should do, then the compliance department gives them recommendations. So hopefully that's clear. It's really a client advocate role. All right, and we've been getting a lot of DocuSigns in, which means essentially executed access to capital agreements. And so with our goal is quickly, but with the type of growth we're recognizing, within a week, within a few days, we should be able to get those executed and sent out. Obviously, with the ice storm, the office has no power. It has no internet. The whole town has no power, has no internet. So today is not helping us keep up. But certainly by Monday, we'll have the backlog cleared up. Thank you. All right, and so Joseph's asking about support. So each client is assigned a mentor. And so when we do each access to capital and or Capital Ready 3.0 client is assigned a mentor, I should say. And so when we onboard the client, then we send information to the mentor, who are joint venture partners, right? And so then and we flag it in our CRM. And so then that mentor reaches out to the client to start the weekly mentoring. And as you know, if it's an orphan client, they're paid $100 an hour. You as a joint venture partner, my responsibility is to work with you, Joseph, in terms of support. If you should ever find yourself out of compliance, which I'm sure wouldn't be the case with you, then you'll be working with the compliance department. But you normally wouldn't work with the compliance department if there's not a compliance issue. Thank you, Joseph. All right, let's see. And I agree. We are Desmond's mentioned the positive impact that we're having on people's lives. For small business owners, we're helping them get their business positioned properly so they're able to access capital to reach their dreams. And so that's That's an honor and a privilege, Desmond, that you and I have about helping small business owners. And then similarly on Credit Boost, I agree with you there too, Desmond, that by helping people move from being subprime to prime, now they can get approvals, often automatic approvals on mortgages and car loans and business loans and otherwise. So it is outstanding for what you and I do. I agree, Desmond. Oh, I just accidentally dismissed one. Let's see here. I hit the wrong button. Okay, Bernard's asking about interest. So, Bernard, when you ask that question, what's important to understand, we are not the lender. We are technical advisors. And when I mean we, I mean you and I. We're collectively technical advisors for clients. So we don't set interest rates and we don't set repayment terms. It's not our role. We don't have that authority. Now, many of you know we're in the process of getting set up as a SBA lender, but separate from that, because that's not in place yet. But separate from that whole future role, we're not the lender. And so we don't determine interest rates or application fees or repayment terms. We're helping build their loan package and helping people become more credible. So you'll often get questions, well, what's the interest rate going to be? I don't know. I mean, it's whatever you qualify for. We don't have the ability to make it more expensive or less expensive in terms of manipulating your interest rate. So, Bernard, if that didn't answer your question, let me know. But we're not the lender. Okay, so there's many different types of lenders, and the SBA is typically not a lender. They're typically a guarantor, and the bank is the lender. So even with SBA loans, there's not a simple answer to what's the interest rate going to be and how's it going to be calculated. It'll vary by client. It'll vary by lender. And you're asking some good questions that people want to know, but often when they're asking that, it's an educational moment to reiterate to them, do you understand what we do? You know, we are helping you become credible enough to get funding. And so we go through a 4-week process. It's guaranteed results. We don't know which type of capital you'll qualify for in the beginning. That's why we go through the 4-week process to gather the data and determine. And our goal is to get you your first tranche of financing between weeks 2 and 3, and to have your file ready to go to funding after 4 weeks. If we get through the 4 weeks and we realize that you're not credible enough, that there's some deficiencies, some voids, some issues, then we're going to work with you to resolve those. And that's really what's so powerful about our program, is that we're not here to tell people no. If they don't qualify yet, then we work with them to help them get from wherever they are to where they want to be. All right, Matthew asks, with the Credit Boost program, does every client receive the same set of trade lines? I would say no, because different people have different needs. But I'm going to expand on your question. It may not be even, Matthew, what you're intending to bring up, but I think it's good for discussion for the group. And we captured this on a recent training, but I'll reiterate it. When people come into the Credit Boost program, it's because they have subprime credit. And if they have subprime credit, they're not going to qualify for the same types of, they're going to have as good of access to capital. Now, it's true, some types of capital don't even look at personal credit. I understand that. But the Credit Boost program is to move them from being subprime to prime so they can go out and get prime credit. When we're adding trade lines through Credit Boost, we're adding subprime trade lines because it's designed to move them to prime. They don't, just because they sign up for the Credit Boost program doesn't mean, oh, well, I've got a 538 credit score, but I signed up for Credit Boost and now I want that $50,000 American Express. Of course not. So what we have to do is build their profile out so they can qualify for prime credit. So it's not always the types of credit that they can go use that's liquid. It's a process to get them to where they need to be. All right. All right. So Desmond says that he had stopped paying. Yeah. So if you're a joint venture partner, Desmond, and you don't do what you promised to do, then again, it's not emotional. You'll just go over to the compliance department and they'll speak with you and help you resolve that. And we've had a number of joint venture partners that have come back recently that had moved into inactivity status with COVID and life happening and say, hey, I see what you guys are doing. I want to get plugged back in. And we make concessions and get them in good standing again, because you want to be in good standing because there's so many financial benefits of being a joint venture partner, Desmond, to be able to write the insurance policies, to be paid $100 an hour to help people. It's great. Okay, and so in terms of mentoring, we have about 112, 113 mentors. I'm one of them, but I'm one of them. And we're needing more. So we're looking for more insurance agents that will write policies and mentor clients. So in my case, my schedule's full, and some of you have filled your schedule. Typically, once you're mentoring about 160 clients, that typically will be your cap. Because if you're spending 15 minutes with each of them, then you're spending 40 hours. And that's ignoring bathroom breaks and lunch breaks. And so John, what I would say is I wouldn't book yourself to mentor more than 160 clients at a time. And so once you get to that point like I am, then there's no more availability. You can certainly hire people or have people under your JV incubator, John, that expands your capacity. So now you have people that are working underneath your umbrella. So instead of being capped at 160 clients and writing 160 key person policies a month, you could have multiple of that. But on a per mentor basis, 160 clients at a time is probably the max. I'm already there, so I'm not taking any more new clients on and getting them out to the others. Thank you, John. All right, so Michael asked about, he wants to start mentoring orphan clients, and that's great. So it's our joint venture partners that do the mentoring. Affiliates don't do it. Credit literacy educators don't do it. And of course, clients don't do it. It's our joint venture partners. So Michael, absolutely, if you have some time to mentor somewhere between a few to up to 160 clients at a time per week, we'd love to work with you in that regard. We just need to get you set up properly so you're trained and supported. You make the $100 an hour, which isn't get rich quick. Your time's probably worth more than that. But especially if you're a licensed insurance agent, I don't know that there's a better lead generation system, because you'll obviously do a needs analysis with every one of them. Thank you, Michael. So just email in, if you will, Michael, and let us know that you want to be a joint venture partner, and we'll do that. And Michael, again, is a great example. Came on as a client, already has funding, sees the models working, wants to get more involved. I'll tell you that on average, about half of our clients want to get involved in the distribution model in some capacity, maybe just an affiliate, maybe a credit literacy educator, or maybe like Michael, becoming a joint venture partner. Okay. Robert, I can check on that again. I drove to the office at 5 o'clock this morning only to realize that we have no power and no internet in the whole town. So I returned home, but I can check on that for you, Robert. Okay. And so, yeah, Desmond, I see your point. So if you sign a contract and you come aboard, and then you go to compliance, then what happens is you work with the compliance officer to make sure that, of course, that we're doing what we promised to do, and that you are doing what you're supposed to do. And then if you choose not to, again, it's not emotional, it's not personal, then the judge will determine if you're breaching your agreement. And if so, then they just go through the normal garnishment procedures and they pull it out of the bank account or out of paychecks. So, just work with the compliance department and make sure that everybody's on the same page. Perfect. Okay. And I'm with you, John. So, yeah, in some cases, things will come up because we're all people, right? And so what could happen is that there's no availability in a given week, maybe if you've missed a call or what have you. So then it has to be scheduled for the following week. That can happen. And that's why I'm encouraging those of you that are mentors, please don't take more than 160 new clients on in a month. Because once you have more than 160 clients, you're operating probably at full steam and you start to have minimal ability to reschedule missed calls. And that's frankly where I am. Not a problem for me, not a problem for us, because I'm not taking any new mentoring clients on. But for Robert and Desmond and others, I know you like helping people, but more than 160 new clients. I mean, that's 160 key person policies a month you're writing. That's not a bad clip. But really, that is one person's normal capacity is 160 clients a month. Now, each month you can add 160 new ones. Okay. Let's see. Scott says 2 questions. As a JV partner receiving orphan clients that have already signed up for access to capital, and that's true. Yeah. So we're not talking about giving you leads, Scott. It's about clients. We're, I guess, giving you clients to mentor. So they're coming in access to capital, and then you're going to guide them through, and we have training there on the IIMFL website that we've talked about. So they may or may not need to become an incubator client of yours. Maybe they do. Maybe they don't have that infrastructure. Maybe they would benefit from having a commercial address. You'll glean that. But so it's not a requirement. So we're not saying because you're mentoring orphan clients that you're automatically signing everyone up to enroll in your incubator. I mean, it's fine if they do, they need it, and you want to help them with that. But that's not the point of it. If they do sign up to enroll in your incubator for the incubator package, then yes, you would invoice them for the $9.99. All right, got a community of 1,000 businesses. I don't understand what that means, but that sounds good. Okay. For the lines of credit, so there's different lines of credit. I think what Matthew's probably asking about is a first tranche. No, I think he's asking about Credit Boost. So with Credit Boost, again, what I said earlier is we're adding primary and or age trade lines to help them move from being subprime to prime. And there are different types of lines of credit that have different attributes. And so for the Credit Boost client, we'll assess that, and it's not your burden. So joint venture partners aren't involved with implementation of Credit Boost clients, but we'll guide them through that. So that's not a burden of yours. All right, let's see. To find out more about the incubator process, just go on iimfl.org, and there's an incubator tab there, Matthew, that you can see all about the incubator model. Scott asked, what needs of the clients delineate whether they need to go into the incubator or not? Well, what you and I, Scott, know is that there's certain credibility factors that small businesses should meet to help improve their access to capital. Things like having an entity, not being just a sole proprietorship. Well, clients that enroll in the incubator, we do that for them. We pay for that. Having an EIN, having QuickBooks to track revenue and expenses, having a business phone number that's listed with directory assistance, having a website. So what I would say is, Scott, just review the incubator page, and then it becomes crystal clear that as you're doing the onboarding of the client, if they have deficiencies in those areas, they might find it attractive to enroll in your incubator for next to nothing and be able to receive that turnkey package. Okay. Brett asks, with respect to the access to the capital program, does the client have control? Oh, okay. Yeah, let me finish the question. Brett's asking, paraphrasing, do clients choose what types of capital that they accept or use? And the answer is absolutely yes. We don't get a power of attorney with the client. We don't pretend to be them. We don't fill out applications for them. We obviously don't fill out contracts for them. So absolutely, the client has the ability to accept or reject any type of funding that comes through the process. And that's so important. So if they don't feel that that type of funding is advantageous for their circumstances, they don't have to accept it, and absolutely never, ever, ever to be signed on the client's behalf. You know, if you've gone through credit repair, if you ever notice that packet that you're signing, a lot of times you're signing some sort of limited power of attorney for someone else to act like you. And I'm not saying that negatively. I'm just saying you won't find that we ever ask for that. We're not going to pretend to be someone else. We're not going to commit someone to something else. So I think you'll like that, Brett. All right, so wrapping it up. So I apologize. Ice storm last night, no power, no internet at the office. It was projected to come back up at 11 a.m. Central. I'll check that here at the end of the Zoom. So we're kind of limping along today, but it's been a pleasure to visit with you all this morning, to be able to go through your questions and concerns, and we'll be back tomorrow morning. Thanks, everyone. Have a good day. Bye.